All right. What is going on, future me? Hope all is well. God bless you. New week, new pre-market plan. Obviously, as with every week, want to go through my observations, what I'm expecting as far as moves and stuff like that is concerned. So, just kind of jump straight into it. We do have the dollar, the daily for the DXY pulled up on the screen. As we can see, right, last week, if I'm not mistaken, we did have CPI drop. We did get a full percentage point drop year over year on CPI from like 6% to 5%. As I mentioned in my previous pre-market plan, anything at or below forecast is bullish for indices, gold, things of that sort, and bearish for the dollar. And on the other side of that, if we start to see inflation rise, that's when we start to see the dollar start to rally. So awesome to see that we did get that expected dollar weakness. I can actually move this trend line over now, put this right here, put these candle to candle solid body looking very good. And so let me lower my mics here, levels. And so that leaves us in a very unique spot, right? As we can see, we ended the week off, this most recent daily candle close, with a bullish engulfing candle at a very pivotal point on the chart. Obviously, we have this level of support at 101.30, sort of 50 area. Looking left, we have not one, but two points in which price found support at this particular level before bouncing. So going into this coming week, the dollar does look primed for a retracement. I have mentioned this, especially in previous pre-market plans, especially around here, this early retracement into the 236, the 102 sort of 50 area. I would not be surprised if we see something similar. On the other side of that, though, especially with the theme of dollar weakness that we're seeing, I would not be surprised if we actually just break 101.50, especially with the entire narrative around how we're potentially getting a handle on inflation, this whole thing. As far as news catalysts are concerned, we do not have a ton of USD news. We do have, the services and manufacturing PMI for the dollar, as well as the pound on Friday. We also have unemployment, plus the Philly Fed manufacturing stuff on Thursday. And then on Monday, there is the Empire State Manufacturing Index as well. As far as GBP is concerned, we do have claimant count changes on Tuesday, CPI for the pound on Wednesday, and what else do we have? Let me take off my glasses here, can't see. We also have a retail sales for the pound, and then services and manufacturing PMI for the pound as well. So with that said, there aren't a ton of news catalysts, just about 3 press releases for the dollar this week. With that in mind, right, this is a perfect week for the dollar to make a small retracement into these previous levels before getting a greater move to the downside. I believe we have consumer confidence this week and a bunch of other drivers into next week as well that can act as very big catalyst for volatile price action. With that said, even though we don't have a ton of press releases this week, only 3, I still don't want to take them lightly, especially with the amount of momentum to the downside that we've seen for the dollar. As far as what I would expect, obviously, further downside for the dollar would look great for me. Wanting to get long on gold. We are starting to see gold retrace as well. So it made sense, again, why we would possibly be seeing a retracement on the dollar here. Points of interest, areas of interest. I can now fix this fib here. Let's move this. Doesn't change a ton. Still 2 very important points of interest. First, the 102 sort of 50 area now in confluence with 382, and then we have the other sort of a range level here at 103.50, also in confluence with 618 now, and then ultimately I guess we have a third now. Always have had a third at this bouncer break level, this 105 sort of 104.50 area, also in confluence with the 786. All of this will be preceded by a channel break, right? If we start to see this channel start to break to the upside, then we know it's starting to confirm at least into that first level at 102 sort of 50. We did see that last week as well. Very clean, very small retracement before a very big knockback on the news. As we can see, Wednesdays in particular, when the CPI numbers dropped, we did see that downside momentum play out. Excuse me. One thing I do want to highlight, though, although I am still expecting dollar weakness, I am leaning more towards a retracement just because support is still support. I will not be confirming, further downside on the dollar until we get a solid body candle close below this level. And that's when we start to look left and see, what levels could we potentially be dropping into. I know that on the weekly, we always mention the 100 level. We have that right here. And then outside of that, we do have more prominent levels around 94 and everything else. And I'll get into that here on the weekly. Ooh, excuse me. And as we can see, right, I always mention this, like literally every pre-market plan, we have a very definitive rounded top back here, also in confluence with 382. And with that, right, we're starting to see, again, that downside momentum play out. I did mention in my previous pre-market plan that the move into sort of 100 sort of 99 area is programmed in many respects, and I still feel that way. Most recent weekly candle close, though, it is, doesn't look the best necessarily. It is, I'm not gonna call this like an indecision candle. It's still a bearish candle, but the widths to the both the up and down side can make it a bit what's the word? It could be a bit more of a wishy-washy kind of candle, I guess you can kind of call it. Especially coming into this daily 101.50 support, right? I need a clean break. I need a solid body close before or below that 101.50 area to, obviously say that the move into 99 into 100 is programmed. Although, as long as we're below 103 overall, we're still extremely bearish as far as the dollar is concerned. We have not seen a reclaim of 103 for a very long time, since January of this year. And so with that, if we don't start to see the bounce here at 101.50, again, I am expecting that further downside into at least 100. And then again, if we start to break 100, we start to look left and have fun and see where is the next area for price to fall, right? Very big range below 100. I mean, 100 straight to literally 96. Like that's nuts. It's a very big move, and not a ton of traffic there either. There might be a small stopping point at 97, but I am expecting a full move into 95, 96 area if we get a solid body close below 100. Of course, as I just mentioned, that is preceded by the move and solid body close over under 101.50. Also, this daily level of support here. Hope that makes sense. Once again, two scenarios. Either one, because we have, not so many news drivers this week for the dollar, we get a small retracement back into the areas of interest outlined last week at 102.50 area or potentially 103.50, or we start to see a very definitive knockback of this descending channel and break below 101 area with strength, engulfing candles and everything else, and we start to see the definitive move into 100. At least if we obviously start to break below 100, we'll start to see much lower levels, but that does make sense, right? Dollar weakness, especially with the CPI numbers that just printed, it would not surprise me to see further dollar downside. We also had a Fed member. I don't know if it was Waller or one of these other guys. They did mention that we are going, there's the next FOMC meeting, very likely that we get a rate hike. No surprise to me, at least. I don't know if it's a surprise to anyone else out there, but the Fed is still remaining strong in their stance about wanting to continually hike rates, even going as far as mentioning that we might have higher rates than initially thought. Whatever word place we want to put in there. So I hope that makes sense. Once again, two areas of interest, three really, and then outside of that, expecting further dollar downside. The yen looking really good to the downside, right? Like it's looking like shit. Daily, right? We finally got that break. We were getting that bounce early into last week. We finally got that, we started to get that break early into the last 2 weeks, that I outlined, and then I did mention as well, this is still support, and we're now starting to see that full breakdown from the 8,050 level into 1776, or rather 7760, as we can see, right? Obviously playing these indexes and pairs level to level, and so as we continue to see JPY downside, obviously I'm still of the same sentiment that the Bank of Japan does benefit from a weekend, and they have all the reason to keep it that way. We should be seeing, right, when we have yen weakness, we have GBP, JPY strength. Obviously, we would need pound strength on the index to back that up, but it is a good sign already to see that, of course, JPYBasket is, falling. It's going to the downside. On the weekly, even more so. I did mention that this weekly range mid is a very pivotal point, a sort of stopping point for a price to either bounce from or have a bearish continuation into, and it looks like we're seeing the latter, right? Obviously, we have a very definitive, very strong, very momentous bearish engulfing candle into the 80-50 range mid, and obviously outside of that, we also have a double top here. Just broke the neckline here. We can take that level to level, and the measure move brings us right back into 75.24. So, with that in mind, right, you have to think, we're right, on GJ, of course, I'll get into that. We're playing around at 166, right? We're at the mercy of the range on GBP, JPY. Is this the definitive move on JPYBasket that we need to see to make a move into 168 potentially? I'll get into that when I get into that, and everything else. So with that, bringing it to the monthly is looking like shit. For me at least, I know that I mentioned in previous pre-market plans that I was looking more towards the weekly and daily for insights into where price should be, moving to next. With 12 days left in the month of April, the monthly candle is looking extremely definitive, right? It's looking very, it's adding a ton of context, I would say, and it's looking extremely bearish. So with that, once again, it adds a ton of conviction in my theory and my hypothesis that we should be seeing this double top play into this range low here at 7,500 on JPYBasket. Obviously, we're free falling on the daily here as well. Engulfing candles, at the very least, we see 77.59. At the very most, we see the full move into 75.25 range low on the weekly. Regardless, I'm still expecting downside for the yen. I don't think there's any scenario where I see potential upside, to be completely honest, unless we reclaim the 8,000 level, which as it stands is not looking like we're going to, it's going to happen, right? We have a high, we have a lower high now. Now we're moving on to making a lower low. So I hope that makes sense. I'm looking for continued weakness on the yen. Outside of that, that would obviously incline me to want to get long on GJ if the opportunity doesn't present itself. Obviously, I would need both the pound and the yen to stay decoupled, and we'll get into that now. Let's look at the pound. So, very strong week for the pound, I will say, right? Ended off, though. It ended off not so hot. I will say, what was it? UOM consumer sentiment for the dollar. There wasn't any pound news last week, was there? Let's just make sure. I don't want to talk out of term here. Let's go back. We had CPI. We had nothing for GBP. We also had some stuff back here. Nothing crazy. We have GDP. Yeah, GDP printed shitty. That makes sense. All right. And so, all right, let's go back. All right. And so, with that in mind, right, a couple of different things. This is going to be a big week for the pound, I will say, especially because their CPI numbers are coming out. Historically, all right, we can even look back at the CPI prints. 10.4 on March 22nd, then 10.1. They're expecting a 9.8. Okay, so let's go ahead and look back at March 22nd. Boom. Bullish engulfing candle on good CPI news, I might add. Good CPI news, actually not good, I would say. It ended up coming in hotter than expected, right? They're expecting a drop from 10.4 into 9.8. So with that in mind, as we can see on March 22nd, we had a bullish reaction to the hot CPI numbers. Other side of that, very, very similar to the dollar. If we start to see lower at forecast or lower, that is bearish for the pound. Honestly, I mean, it's looking like, especially because not only is the US, not only is Europe, not only is the pound all raising rates, it's all because of the same reason. At the end of the day, they want to get a handle on inflation, right? Typically, when you deflate a currency pair, or rather a currency in general, it falls in value because you're deflating it, right? Like it's coming down. And so with that, right, same exact observation that I made with the dollar last week for the pound this week. Numbers at or below forecast are bearish for the pound. On the other side of that, bullish for the pound, right? If we get, if we're forecasted at 9.8, we get a 9.9, right? That is a bullish reaction. I would expect a bullish reaction on the pound. As it stands, I mean, it has been sort of trending lower, I would say. I mean, not consistently necessarily, but with the amount of rate hikes that the Bank of England has put together, in tandem with everything the Fed is doing as well, although the two economies have nothing to do with each other, from that particular standpoint, I do feel, right, I feel it in my bones that we should be seeing more downside for the pound. And now, as far as GJ is concerned, that's not ideal, just because, again, I would want to see the pound and the yen decoupled, i.e. moving in different directions. And so if they're both free falling because of shitty CPI numbers for the pound and then overall yen weakness, that's not going to look good for wanting to trade GJ, right? It's going to lead to a lot more choppy price action. So we have to kind of walk on eggshells, I will say. So with that, if we can, again, turning back to the technical side of the chart, right? If we can form a base on top of 124, looking left, right? We had used this point at 124 as resistance. We used it back here as resistance as well. I'm sure I could look back once again and find a third point of resistance here as well. We have now turned this level of resistance, we've now turned it into support, right? We had, all this, it would come down, it would come back up, it would knock back, knock back. It finally squeezed. This time, it did not knock back, right? Printed above, break, retest, right? What I would like to see is start to have price sort of form a base here before making that move up, right? But so again, something to take into consideration. We could see potential downside back into 122 off of those CPI numbers. So maybe it looks something like this. and then we consolidate here. We might have to wait 1-2 weeks to get a good trading week on GJ before that big move up, right before those two indexes finally decouple. So those are two observations I'm going to be making into the coming week. Once again, I don't want to rule out the fact that we should be seeing pound downside if we get lower CPI numbers than expected. But on the other side of that, just technically speaking, we do have a very well set stage to build a base on top of 124, especially looking left. This is a structure that has held as resistance, now turning into support. Whew. The only thing that kind of rattles my conviction in that is this most recent daily candle close. It is looking extremely bearish with a lot of momentum, but it is still a sort of higher high in the overall structure of things. Looking at it on the weekly left us off on an indecision candle. Didn't leave us anything to work with. Looking extremely shitty with that, right? Kind of adds a little bit more context around the CPI print that's coming out this this next Wednesday for the pound. Not only are we at a level of resistance on the weekly chart, this is also in confluence with the 618. So it is a little bit more of a sort of conflicting evidence here as well when we look at the daily, because we're like, we just broke local highs, we're retesting to go higher. Wrong. We have an indecision candle on the weekly in confluence with the 618 here as well. So it's still a very well-respected high time frame structure, right? Just because the daily looks good doesn't mean that we should throw all of our ideas out of the window because it's focusing on one time frame. We have to look at the weekly and monthly as well to add that context and add to our directional conviction, I guess we can call it, right? So with that, right, into next week, I mean, I would not be surprised if we again see the retracement to the downside just because of where we're at on the chart and in confluence with the CPI numbers coming out here this week as well. But once again, I mean, honestly, I wouldn't be jumping for joy unless we get a break of 126 to the upside, right? Even because at that point, resistance is still resistance. We do have this inverse head and shoulders that has yet to play out. If we do break down from the 618 here, if we do break back down to like the 120s, for example, this head and shoulders, inverse head and shoulders, is invalidated. And I'll just have to see where price sort of finds its footing thereafter. Excuse me. As it stands, my overall sentiment is that we will be getting knocked back potentially from this level unless we form a base on this level of structure we just printed above. Hope this makes sense. Something I have to keep tabs on. Monthly looking very good for the upside, right? This is one of those scenarios where I'm looking more toward the daily and weekly for added context, just because, again, I mean, although there is 12 days left in the month, this could be all upper wick creation, as I mentioned in previous pre-market plans, right? This could be, the perfect, this could be the calm before the storm, so to speak, before the big knockback down. Although, I mean, obviously I wouldn't like that, just because, again, I want to see both the pound and the yen decoupled in nature. But, it is an observation that we have to make. Outside of that, this is still, from my perspective, right? From everything that I've mentioned in the past around, all right, awesome. This could either be a big reclaim of 124, this big area of liquidity, or a big knockback. This is a more bullish scenario that is playing out if we can get the monthly candle to solid body, right? If we can get a solid body close bullish, like if we can get something like this, I mean, something like this even, or, what else? Something like this. It would add a ton more conviction and further upside for the pound, unless we see something like that off of the next 2 weeks candle formation. It's looking pretty bleak. So once again, just kind of sum it up, we are at a level of resistance in confluence with 618 here as well. One of two scenarios: either resistance is still resistance, we get this big knockback into the 120s, invalidating the inverse head and shoulders, or especially with the CPI print, or we see a bullish scenario start to play out where we either get a base formed on top of 124 or a small retracement into 122 before that bounce back to the upside. We'll have to kind of keep tabs on it, and that's kind of my overall sentiment. So I hope that makes sense. So that leads me into the pairs we will be trading for this week, or at least I'll be trading. I don't know what the fuck you guys got going on. Let's start with GBP JPY. We had a pretty, I guess we had kind of a strong week for GJ. We did get a bigger move into 166, and we're in a very similar situation as we were in, last week. 166 has now become the new 164. This is the new bounce or break level prior to 168, right? Reason why I say that is because a couple of different things. This is a very strong level of structure, one, on high time frames and low time frames. Two, We have a very well-defined fib here. This is in confluence with the 618. We also had a rejection. We've had multiple rejections from this particular level. This is a pivotal point on the chart for a big move to play out on GJ. Either one of two things, right? Either one, we get the knockback from the 618. We can get as far as 168 and then get the knockback, or we start to see price finally squeezing back up, as we can see with this trend line here. What happens when we see these sorts of trend lines? Either one of two things, as we've seen back here, right? There's a huge trend line. One of two things. Either we squeeze, we swing fail, and make a bearish move, a big bearish move to the downside, or we get the ascending triangle to play out to the upside. There's a very clear range from 168 into 176. I'm not going to tell you whether or not we're going to make that move. I don't have a crystal ball, but that's how these sorts of structures and patterns tend to play out in my experience. So I want to respect price as such. We are above 164. So in many respects, I am bullish, but as I get into intraday time frames, I will kind of tie it all together as far as what I'm looking to see, where I want to see it, and what I'm going to be doing when I do see those things. Overall, just from a weekly time frame perspective, we're at a very respected level of resistance. So, of course, I'm going to want to respect it as such, but I don't want to ignore the fact that this is a weekly engulfing candle, and we could get that full move into 168 before we start to see any downside. Hope this makes sense. Going into the daily. Daily is looking good. It's looking good, right? So we had. I keep on saying so with like so much enthusiasm. I don't know if I can put a fucking counter on the screen, but this is. I'm sorry, future me. This is getting annoying for myself as well. Anyways, so there I go again. We ended last week with a double top. So we ended not last week, but the 2 weeks ago. We ended the week with a double top. I did mention as well we had three areas of interest, either 162 range low, 164 range mid for the bounce break into either of those levels, and then the 166 range high. We got the latter, right? We get the bullish scenario from 164, the bounce break into 166. 166, as we know, looking left, is a very well-respected level of structure, but we have two engulfing candles, two very well-defined and respected solid body closes. With that, when you see preceding moves like this, right, everything thereafter typically becomes a retracement for the bullish move or the move back in that direction, right? And that's exactly how I'm wanting to treat it. And this is going to make a lot more sense as I get into intraday time frames because the range is much more well defined. But if we start to see rejections, if we start to see a loss of momentum at 166, I would not be surprised if we start to see that move back into 164. 164 is a bouncer break level at this point. And if we start to lose 164, of course, I'm starting to see a bearish reversal. I'm starting to expect a bearish reversal. But if we start to see retracements, we also have, again, we have this bullish move into 166. If we start to see small retracements on intraday time frames, creating these sorts of wicks and building a base on top of 166, I see no problem with getting long from 166 into 168 just from a daily time frame perspective. We also still have 164 as a sort of intermediary, a sort of stopping point for price to bounce or break from. Going into the 4 hour always becomes a ton clearer. Very, very simple, right? Two scenarios. It looks like the bearish scenario is starting to play out on smaller time frames just because of the way that, again, what happens when we see these fucking, these trend lines, right? I can look back at history. Either we get the squeeze to the upside or, even we get both deviation and then back to the downside, or we get, again, full move to the downside. Very similar. Look at this structure. Either we get the squeeze, pop to the upside, ascending triangle, or we get the squeeze to the downside. We get the bearish move, right? Time and time again, we see this all the time. I've literally just named 5 different scenarios. I can keep on going back. Another one. This one right here looks the most similar. I can probably even take a fractal. Let's see. Just so you guys, or just so my future self can get an idea of how these moves typically play out. Let me reduce it in size. Look at this. This is literally carbon fucking copy. Let's see exactly the same before that big move to the downside, right? I can even move it over. Looks identical. This looks identical. So with that, right? This is a bouncer break level. This 166 resistance, is a very important level. Once again, as we can see, one of two scenarios when we see fickle trend lines like this, when we see sort of patterns forming like this. we either get the rejection from 166 where, which it looks like it's starting to play out. We have this engulfing candle to the downside here, and now we have not been able to close back above the 166 sort of 25 area, back where we started to form a base up here, right? We got a sort of fake out. Look at this candle. This looks extremely bullish, and then knockback, straight knockback, identifying this as a very strong level of resistance, a very strong level of structure, as we've seen back here and back here. So with that, this could be a very big squeeze and break down from 166. And with that, obviously, I would want to see a break retest of this level. So if we get the move into like 165, break retest of 166 and lower, I would take that all day, every day. If we start to see engulfing candles like this, and then start to see big, rejection wicks to the upside like this, I don't want 100% take it all day, every day without the retest. But if we start, but if we start to see like this choppy range that we're starting to see here, this looks disgusting. Like we start to see stuff like this, this big range like this, I honestly wouldn't want to take it. And that's why I would probably lean towards the break and retest of 165 back into 166 and then lower than that. And then bullish scenario, right? If we get another candle like this one right here, if we get another, another candle like this, that's identifying to me a very bullish scenario. Obviously, I would want to see the local highs taken out with a candle like that to confirm the move to the upside. But if we do start to see momentum gained and the local highs broken with momentum and strength, engulfing candles, everything else to the upside, I would take that into 168 all day, every day. The June high all day, every day. We are no stranger to the June high. Going into the 1 hour, always becomes a ton clearer as far as the range is concerned. As we can see, very well-defined range, even more so than the 4 hour. And I'm going to go ahead and draw this box here just to make it a little bit more easy to identify. Oh, excuse me. As we can see, we can even pull this to over here. Boom. A very well-defined range. We had a scenario where we had a fake out to the upside on, from a 1 hour perspective. Let me just say. Very well-defined range. Obviously, extremely bullish move to the upside. We tend to consolidate before making the change of structure or the continuation, right? We've seen this time and time again, right? It's like an upside-down martini glass. We get the move to the upside, sideways, and then down, the leg down. And so the break of this range is going to be pivotal in me identifying that change in structure. As we can see, this is also sort of I've used this in the past many times. We kind of call this like a last kiss. It's a sort of a... It's a pattern. You can guys Google it, whatever you want. So, it's just a way to trade range-bound environments. So, with that, we're between 166 and 165, sort of 50 area. Obviously, breaks in either of those directions are bullish and bearish. A break and retest of 166 is bullish, as we can see with this current range, the current price action that we're seeing. We're failing time and time again to break above 166. We're wicking, making moves back to the downside. We've only had one scenario where we had a small deviation, a fake out to the upside, right? This is exactly what I would want to see if I was going to get bullish, right? I would want to see big momentum to the upside, wicks to the downside, breaking this consolidation range and everything else to, again, confirm the move to the upside. So I would not be wanting to trade bullish moves on GJ unless we get a break and retest of 166 all day, every day. Also sort of in confluence with this box here. On the other side of that, I would lean more toward the 4 hour. I would lean more toward the 4 hour and the 1 hour in confluence with each other, right? Why? Because we're already starting to see the makings of a reversal from 166, a bearish move to the downside. As we can see, we had this fake out with this big engulfing candle to the upside, bullish engulfing, and then we had two consecutive bearish engulfing candles, huge momentum to the downside, and we've not been able to reclaim those local highs since then, as I mentioned on the 4 hour. Right, so the preceding move here is bearish. So any sort of move thereafter should be a retracement for bearish price action. So if I start to see, I did not mean to do that. So if I start to see more rejections, if I start to see more price action similar to this, we start to, we bounce from 165 with huge momentum into 166. Wick can't close above it, similar to like we've seen back here, and similar to like we saw back here. I would want to get short from 166, especially again as we see it on the 4 hour. Is a very well-defined level of structure. Unless it builds a base here, I will not be getting long. Also, other side of that, there are two areas I can get in the trade. Either 166 and the long wick rejections of 166, also this trend line rejection, And then the second area is 165.50, these local lows. This is actually the more, I would say this is the safer setup of the two, just because, again, looking left, there's not a ton of traffic. This is a very clean move into 164 overall, about 150 pip move. And so with that, I would take breaks retest of 165.50 all day, every day. Again, very well-defined level of structure looking left. It would be, it wouldn't be any surprise to expect a continuation thereafter, like if we started to break these lows and everything else. So I hope that makes sense. Very simple, very straightforward. We're at the mercy of the range as it stands. Breaking retest above 166 is bullish. Breaking retest below 165.50 is bearish in between this consolidation range. I hope that makes sense. Going into gold. Gold has been on an absolute tear. I said this last week. Very good moves caught this week. Awesome. Excuse me. Let's go on the weekly. So, as far as the weekly is concerned, right, this is a very tough spot to be in, right? I am expecting, once again, as I mentioned on the dollar, very good week for the dollar to retrace, even if it's a small move, after all of the bearish momentum. With that, we would see gold downside as a result. I will say we did break the local highs looking left, which is obviously awesome, but that makes it a very important case for us to start forming a base above 2000, above 1980 sort of area, right? If we start to see breaks of structure back below these sort of local lows under 1970, it's not looking too good. It's not looking too good. That means that we would get the full move into like the 1900s before starting to see any upside, or it's a full bearish reversal, right? And we don't want to see that. I want to continue to capitalize on longing gold. So, although that is a scenario that can play out that I just mentioned, going back into the 1900s, excuse me, I'd like to see, ideal scenario, start to form a base above 2000, above this local area of resistance that we just broke out of, right? If we can start to form a rounded bottom above this level of structure, it's looking extremely good to make a move into the local high at 2077 that we're seeing here. And as we can see, looking left, every time that we broke this level of structure, we've always at least had 2077. So it does add a bit of conviction that we'll end up seeing 2077 at some point, because we've actually broken this level of structure. When we see it, I'm not too sure, because this could be this could be the makings of like an evening star back into 1900s. Could also be like a makings of a right shoulder, head, and potential left shoulder into the coming weeks. So just something I'm going to be keeping tabs on. But with the overall theme of dollar weakness, I would expect gold to bounce at some point. Excuse me, I'm fucking going 100 miles a minute. Excuse my language. Excuse everything. So that becomes a ton clearer here as well on the daily. As I mentioned, we did have these two consolidation boxes here last week, and we did see the strong move break retest of that particular level of structure, also in conflict with like 1980 and the 2000 sort of level. That level of resistance now turns to support, and we're starting to see the same thing. We got the break and retest. We have the higher lows now making a brand new higher high up here around 2045. So it's only right that we start to get a small retracement and make a higher low. Looking left, right, we have very local levels here at levels of microstructure, I guess we can call them here as well, around 1990. The very bottom of this candle being 1980. And so for me, I'm wanting to remain. I'm wanting price to remain bullish above those levels. At least, if we wick into those levels, I would like it to remain a wick. If we start to solid body below like 1980, that means that we're starting to get a definitive move into 1960. And I mean, it's a little bit choppy looking left, right? So it's not the most ideal scenario, but I would take buys from that 1960 area if we did end up seeing it. Anything below 1960 is a sort of bouncer break area. So I mean, I would just honestly be sitting on my hands until gold starts to find a floor for itself, going into the 4 hour. So when we look at this in the 4 hour, honestly, this looks beautiful. This looks like everything that you want to see when we get these big moves to the upside, these big pops to the upside. We get a big, obviously big momentum, big engulfing candles to the upside, and then retracement. We have higher highs. Oh, excuse me. I can put this right here. We have higher highs. And now we have higher lows. We have another potential higher low with this higher high. And so with that, this is also in confluence with the level of structure we recently broke out of looking left, use it as resistance, now turn it into support. So I would like to remain of that sentiment. I would like that theme to remain the same going into next week, although I can't control that. And then we also have it in confluence with the 786 and 618. And so, in my observation, in my analysis, every time we see big moves, obviously, gold goes on its tear, makes a huge move to the upside. It always, has a very aggressive retracement. And looking left, every bounce starts with one of these little engulfing candles. One of these. Doesn't have to be super strong, but it always starts with one of these little engulfing candles. And so looking left, what do we see? We have huge upside momentum, big, aggressive move to the downside. And what do we get? Small little engulfing candles to form a base and move back up. Big move back up to 2000. Huge, aggressive retracement back to the downside. What do we have right here? Same exact candle. And then we get another big move. Aggressive retracement to the downside. And this happens time and time again for gold, as we can see right here, as we can see, back here. We can see it everywhere. We can see it back here even. And so this has everything. This has all the makings of a bounce from 2000. And 2000 is a very pivotal level. It's a very important level. I would like for 2000 to be the level that we bounce from, but we also have the 1980s. This is something I want to highlight here as well. These 1980, these 1990 sort of levels are pivotal because not only they're a local low, they're also in confluence with the weekly levels as well. So not only will we be breaking these local lows if we did, we would also be breaking into the weekly range we recently just broke out of. Hope that makes sense. So it's very important to me, at least, to see price remain above the 2000s and 1980s overall. Especially what, obviously I would love to see stability on top of 2000 right here and then buy into 2077 and the local highs. Hope that makes sense. 1 hour always becomes a ton clearer. And so, as I mentioned, this 2000 level is a very important level. We're already starting to see a rally, right? Again, as we've seen, very aggressive bearish retracements, and then we always start to form a small base with these engulfing candles, right? Again, back here, back here. It always happens. It always happens for gold. That's just the way it moves. And so it's great to see that we've seen this early into the end of last week, because we can start this coming week off, of the same sentiment and everything else. And so as far as where I'm wanting to be positioned in the market, obviously would like to see a base formed on 2000. We get this big move, or rather this small move into 2000, reclaiming the range, retest and move higher is what would be ideal to me. Similar to what we saw back here, we get the bullish move, quick retest of 2000, takes off. If we don't see that, right, one other level for me to take into consideration is, of course, the 1980 bouncer break sort of level. This is a big high time frame level, as I just mentioned on the 4 hour, is in confluence with that weekly level. Actually, it's back here, this 1990 sort of level. So of course, very important that we see stability above sort of 1990 and 1985 sort of area if we want to remain bullish. If we break below 1980s, I am sitting on my hands. I'm sitting on my hands until we see 1959, and I'm sitting on my hands if we move lower into 1937. Just because, again, I'm wanting price to find a floor before I catch a falling knife for something crazy. So again, 3 areas of interest as it stands locally for me to get long. I am not looking for shorts whatsoever. I don't give a fuck. Excuse me. 2000 first level, second level 1985. Between 1985 and 1990, I would extend this line over, just because, again, it is a big high time frame level. And then 1959 as well, I would be looking to get long from each of those areas. If we start to, if price starts to move on without me, I'm not going to get in on this range mid. I'm not going to get in on this range high or this range high. I would just wait. Honestly, I would just wait. And yeah, that pretty much sums it for me, honestly. Just to kind of sum everything up for gold, we have the 2000 area of interest, this level of support I'm waiting to build a base on. If we build a base similar to like we see back here, and everything else, or not back here, just back here overall, if we start to form a base and turn this into support, I will take buys all day, every day. As we can see, looking left, this is a big level of resistance that's now turned into support. So this is the most likely level for me, at least, to see price bounce from. Also, a higher high from the 1980 wick that we saw back here. If we don't see that, if we retrace lower, I would take buys all day, every day from the 1980, sort of 1990 range. And then the last resort level for me to take buys is 1959. Yeah, hope that makes sense. GBP, JPY, we are range bound as it currently stands. I would be open to taking breaks and retest buys on 166. Breaks and retest on 166 is bullish. If we start to see continual rejections and breaks of this trend line below 166, I would take sells at 166 because my invalidation is so close. I'd probably place my stop at 166.40. And then outside of that, third trade idea would be the break and retest below 165.49 into 164 all day, every day. As I mentioned in the past, this is a range bound environment. So when we break the range, especially when we go into an area that has no traffic, it is a very big and very clean move. So I hope that makes sense. Future me, God bless you, bro. God bless you. I hope you're living your life to the utmost. Can't stop, won't stop. You know, it's just this is our default way of thinking. You feel me? Can't stop us. You know what I'm saying? Like, I hope you're living your life to the utmost. God bless you. I love you. You know, doing your thing against all odds. You know, nobody can stop you but yourself. And just God bless you. God bless everybody that's watching. If there is anyone watching, if not, awesome. And yeah, God bless. Hope all is well. Take care.